Good morning.
Morning.
Thanks so much for doing this again.
That's right.
Um, Very pleased to get you back. Obviously, people are quite keen to hear about the story, so I'm going to hand over to you for a bit and just let you talk about Manchester and London and how it all works, please.
Sure. If we could go to slide 2, please. So I came on your show a year ago, and I sort of gave an overview of sort of economic and financial history in light of technological change. And I basically, on the next two slides I show now, which were in the previous presentation, hopefully laid out a compelling case as to why there are always material investment returns available. Almost every decade from the 250 years that we have seen since the start of the Industrial Revolution in Cromford Mill, from investing specifically in the technological era of the day. Now, you'll be pleased to know I'm not going to go over all that again, but it is on your website, and I strongly suggest anyone who didn't see that presentation, please do log on to James's website, QuotedData, and maybe watch that presentation, because I am going to give a sort of follow-on presentation now from that, so it may be worth going back to after this presentation. So in that presentation, bottom right of this slide that you can see, we are now, in my belief, and I think most people's belief, the era of AI. And you can see it just starting with that purple line. So if we flip over to the next slide, again in the previous presentation, I highlighted a newsletter we had written, the link of which is a MailChimp link in the middle of that slide, which detailed our sort of theory on the 4 stages of the era of AI. Again, I won't go into those today. Again, they are on your presentation. But it is our expectation that those 4 stages, as they play out, will lead to extremely exciting growth, both for the artificial intelligence market and for the cloud computing market, which is shown in the charts at the bottom. If we move to the next slide. So what I'm going to do today, in the time we have, is I'm going to say, look, we had this presentation a year ago. What has happened in the year since I saw you last? And I've broken it down into bullet points, and I'm going to go through those. So I think the key point from a year ago, James, is that models and AI have got a lot smarter. And we have not even gone multimodal yet. So just to explain that, most of the models, most of AI is currently training on text only. And there is a perception from both neurologists and AI scientists that should you be able to train models on image, text, and video and 4th dimensional data or n-dimensional data, then the models will get even smarter. So what I'm trying to illustrate by that point is we are still probably, no one knows the future, in the foothills of the progression of the intelligence levels of AI. Point 2, in this last year, we have seen the birth and development of reasoning models and the incorporation into these models of reinforcement learning. And this has driven absolutely exponential growth in token use during inference of these models. And if you have greater use of inference, token use in inference, this naturally means that you need more compute to undertake it. So I put some 4 slides there to illustrate my point. The top left one, I think this is quite interesting. When I spoke to you before, we had basically a clustering of models around the IQ level on the human IQ distribution chart of around 80, 85. Now you can see that the main clustering now is around the sort of 110, 115 levels. clearly AI has upped its IQ game quite dramatically over just a year, which is pretty impressive. Um, I think the chart on the top right is very good as well. So what it really is telling you here, to put it in different language, is if a human undertook a task that took, say, 5 minutes last year, AI had the capabilities last year to be able to do that very same task to a high functional level as well. If you actually look now, you can see that the capabilities of AI have expanded from 5 minutes on a task length basis to 1 hour. Now, I think that's actually pretty critical if you really think that through, especially on an enterprise level, because I don't know about you, but most of the jobs I do on a day-to-day basis don't really take much longer than an hour. So if you can actually get an AI to do a job a human normally takes 30 minutes, 45 minutes, you're covering a very large spectrum of the workflow of the modern employee or workflow operator. Bottom left, we have a slide here from Nvidia GTC, Jensen Huang, CEO of Nvidia, and he's actually talking about his biggest surprise over the last year. So rather than listen to a guy like me, you can listen to the genius himself. And he says, look, a year ago, we had these traditional LLM models, and if it was processing a task, may do that with 430 tokens. But today, a reasoning model will do that with 20 times more tokens. And due to the architecture of the coding of the way that happens, he points out that that actually leads to 150 times more compute. Um, so, you know, the point that I'm saying is the message that I'm giving here is that AI is getting cleverer, and as it gets cleverer, it needs more compute. And really, just the last chart on the bottom right again shows you 4 reasoning models against non-reasoning models, and the compute and the tokenization that they're using in their reasoning and in their answers there. So in other words, AI is getting smarter, it's thinking more, it's using more compute, and it's more functional. So next slide. The other big thing that happened is the cost of inference and training has come down. Now, this was a huge surprise to everyone apparently in January, and the whole world seemed to fall apart and everything. But to be honest with you, this is not a surprise to people in technology. And in fact, you can see actual model pricing has been coming down from 2022 in a fairly organized and predictable pattern. I would point out this is a log scale chart. So this really does indicate that the pricing is coming down quite dramatically. So you can see DeepSeek at the end of that. It has continued to go after that, but I couldn't find as good a chart that illustrates this point. So, but what is most important about that is that it's very like what happened with semiconductors. So we've all heard the sort of analogy of the microchip that used to run NASA's sort of moon rocket is now basically in your mobile phone. And actually it's not. It's now in your wearable device, which tells you, what your health is today, etc. Yeah. So it's often called Jevons paradox. It basically is a statement from an economist who basically said the cheaper things get, then the more they will be used for different functions. They will diffuse throughout the economy. And obviously, if AI gets cheap, we like that because then it'll start being used for more and more functions. So the point is, this did happen. It's been happening before. It will continue to happen, and it is a good thing. Point 4, contrary to all the press reports, there is no slowdown in cloud computing capex spend. And in fact, cloud computing is expanding from the hyperscalers to multinationals to sovereign states. And, you can see on the bottom left here again, okay, it's a Nvidia chart. So Mandy Rice Davis, they would say that, wouldn't they? But, you can see their forecast for cloud computing capex going forward. And you can see a Bloomberg forecast as well. So they are trying to be independent, I guess. But interestingly, you can see that it's moving away from the hyperscalers to the other op. Moving to the next slide. Clearly, point five is pretty much a given. Yeah, we all know there's been an increase in geopolitical tensions. I've got a quote there from Jacob Hellberg that AI is the essential omni-purpose technology of the US-China arms race, like steel in medieval warfare. So, believe me, this is not going to go away because, the USA understands it's got to win the AI race. It didn't really understand that with Biden. It does understand it now. And even Europe is waking up to this fact as well, if you listen to von der Leyen. And point six, I think, also is a point that needs to be stressed. So, all the media keep telling us that no one really uses AI and it's sort of bubbling out, fizzing out. Well, ChatGPT has just been an astronomically fast growing application. It's now bigger than X. It's the fastest growing application ever in technological history. And you can see that it's gone roughly from when I spoke to you before of about sort of 150 million users on a weekly basis. And, basically it's gone to 800 million users. I've got monthly there, but it's weekly below. To 800 million users in April last month. And, most importantly, I think that they're running 1 billion queries a day. Anyone who sort of says this is not happening, I think is slightly getting a bit confused, to be honest with you. Yeah. And final point of what's happened is AI has won a Nobel Prize. I mean, what more do you want? So effectively, DeepMind Alpha 3 won a Nobel Prize, and it's just increasingly being used in medical diagnostics. So hopefully I've indicated that a lot has happened in the last 12 months. So what happens now? My next two slides are just going to run through some key points of how I see things developing now, or what you should watch out for as an investor to see whether they do happen. If they do happen, the story gets even better. So I think the next thing we need to see is operators and functional agents. So these are guys who are AI, which are using agent-to-agent collaborations, using your data, whether consumer or enterprise, to undertake standard workflows. I put without human involvement, but I think it's better to write with limited human involvement. So what we need to see in further development is further self-coding of these agents. So they can actually write code themselves to reiterate and regrow themselves. Once they see that what they're doing is not quite correct, then they'll rewrite code to restructure to do it correctly. And that's coming, we believe, this year. And I think that will be a major step forward. But the key point is that we're already seeing substantive and tangible results, albeit on the whole by technology companies in using these agents. So, you can look to ServiceNow, Amazon, but there's a whole range coming out in this current results season, illustrating how they're using agents and how they're making savings from this. But that's a key point to watch. The best monetization prospect for AI will be operators and functional agents. So we have to see this operational and working properly. Next one, robotics and physical AI, from simulation to new paradigm manufacturing to Waymo to war drones. I don't want to go on about this too much. It sounds very futuristic, but what has effectively happened in technology is it has got to the capabilities whereby the simulation software, in conjunction with the synthetic data that is being generated from that simulation software, is often training AI better than real world data. So, for example, I was in San Francisco in March. I went to see Uber, and Uber was saying that some of the new AVs, autonomous vehicles, are actually being trained in a simulation, okay, on simulated roads and street scenes using simulated data, and they are then put into the real world to further train and further reiterate, but they're actually better than the real world trained models. And that's because real world stuff happens with the limitation of time. Yeah. Whereas simulated time, you can give it millions of years in seconds of training. So, you know, I think that was a problem to make robotics and physical AI work properly. But now we've seemed to have broken through that barrier due to the fact that we got better compute and better software. So I'd expect to see a lot more from this going forward, and something that people should watch out for. Now, the last point on this slide, which is the last big point I'm going to make, is the TAM expansion. Now, if there's anything I want people to remember from this presentation, it's this point, because I think this is a point that people are not really getting. So we had software 1.0, and that's now going to software 2.0 with AI. But the real goal of AI, which is what people are seeing the opportunity, and it's a huge opportunity, is that we're going to get to software 2.0 and labor. So to illustrate this, there's a guy called Tony Kim. He's head of BlackRock's technology team, and he made a great quote here. So he's explaining it. He said, of the roughly $100 trillion of global gross domestic product, 55% is labor and 5% is tech spending. Even if you took just 5% out of the labor, you would double the tech spending. Now, previously in this presentation, I've illustrated that AI can now do tasks for an hour. It can now substitute the work of an economic unit of labor for an hour. Yeah. And it's already starting to happen with the point that I put up on point one here, through service agents, easy jobs, call center, IT help desk, onboarding to a job, regulation and compliance on minor matters, etc., etc. So it's not inconceivable that 55% is not just going to see 5% of it eroded by AI. You could suddenly start seeing a major shift, like 20% move over time to AI, at which point you're going from 5 to 25% on the IT, and you're seeing 5 times growth. And that's why people are very excited. And this is a key point, because if you read the media, all they tell you is, yeah, we're in the era of AI, that's great, but we were in the era of the internet, and they're pretty similar. They're nowhere near similar. Because the internet era was very important. Look at all the businesses it's built. But in the end of the day, if you boil it down, I don't want to argue about anyone with this, and of course it's a bit more complicated. It's a data, it's a data distribution methodology. It's like the printing press for today. It digitalized material and put it into your living room, and then you could do e-commerce, or you could watch news, or you could watch this excellent show, James, from the comfort of your home. But what AI is taking the economic unit of labor and basically providing an enterprise substitution for that. And that is just so much bigger. And that's why people are much more excited. So I know I'm sort of on my time, but I'm just going to quickly go through this last slide. So, point 4, we see disruption of huge swathes of software 1 and services 1.0. I think I've said this before. I said it on your last show, and I think I've been proven right in the last year. The most dangerous place to just blindly buy shares is probably in the software sector. So I know people are going to think I'm some sort of tech sort of zealot who says that you've just got to buy all technology. Well, actually, you don't, because the old legacy software companies have got a problem here, and they need to move and change. Otherwise, they are going to be roadkill and disrupted. You can see the roadkill in our cartoon, which was generated by ChatGPT. I'll let you know. But overall, the era of AI should be a huge boost to economic productivity. And if there's one thing, everyone knows about economics, that productivity leads to abundance. I have put all World War III because there is a chance that it also leads to a conflict between the USA and China. And point 6, I don't want to get drawn on any of these, but just to highlight them, I think there are some other consequences of this AI era. I think the tech enlightened will get rich. I think the Luddites will suffer. I think the USA will thrive. I think China survives, then revives, probably post Z. Developing markets wither. IP becomes even more valuable compared to just commodity goods, services, and products and Me Too companies. There will be fewer jobs, I'm pretty sure of that. That's probably going to lead to cannabis and UBI. And I think there's going to be a movement towards synthetic media, synthetic truth, synthetic relationships and trust. That all sounds a bit sort of Illuminati, I must say, but there we go. We can deal with that in a Q&A if we need to. But AI is not going to take over the world. There is not going to be some robot dictator in the future. I'm pretty sure of that as well. So I think that's within my time. So hopefully I've given a sort of roundup of what's happened in the last year. It's been very exciting, contrary to what some people tell you. And I think there's been a fantastic progress. Technological or any development is never linear. And I think these are the things that you need to look for moving ahead.
Great. Thank you very much, Mark. Very interesting as always. Lots of questions coming through here, actually. Maybe sort of something specific. One thing that we see a lot in the press is about hallucinations and stuff that AI gets wrong and whether that's getting worse.
Yeah.
Is that something you're worried about or not?
I think that's an absolutely brilliant question, James. Now, I'll tell you why it's a brilliant question. Yeah. Is that when you make a decision in business, right, you make decisions on the whole based on relative decisions. Yeah. And as I've laid out before, the decision here is do you, right, use AI or do you use human operator? AI operator, human operator. Now, this is the point, right? So I've just said that AI has gone from an IQ of 80 to 110. Now, do you think humans have done the same growth in IQ over the last year? In fact, there is an article in the FT that now has put out some scientific evidence that people in the West, in the developed world, that our IQs have diminished since the 1970s, right? So this is the point. Right? Are you humans are competing against machine? Yeah, it's a relative argument. We are getting worse. They are getting better. Now, are are machines right? Is AI 100% accurate? No, it's not. Am I 100% accurate? No, I'm a hell. Warren Buffett himself, who spoke last weekend, said if you get 52% right on the market, you're doing really well. That's one of his most famous lines. So, yeah, of course it hallucinates. And of course, as it gets cleverer and more complex, it's going to hallucinate more. So what? Deal with it. That's why you are going to have some jobs. You can have some people over supervising it going, okay, it's given this answer. Yeah, this looks good. Yeah, that's logical. Tick, tick, tick. Let's have a sequential software check on that. Logic, logic, logic. Yes, tick. Okay, proceed. Bam. Okay, that looks wrong. Send it back. Anyone, what do you? Anyone who asks that question, I just think they're one of these people who must sort of look at themselves in the mirror and think, oh, look how perfect I am. Yeah, I'm afraid it doesn't work like that in the real world. If you present a business person, yeah, a labor human with all their flaws, they get sick, they have all these problems, they make mistakes, and quite frankly, they hallucinate a lot, James, a lot. Yeah, especially when they've got some free UBI cannabis. But anyway, or you've got a machine that you know is, and it's actually going to say on the label, this will make 3% errors. So you need to build it into your systems. That's what businesses are meant to have, systems and internal controls, so that you can control, monitor, and manage those errors. Of course, it's going to make more, more, more. But that doesn't matter because it's like the lion. The lion, you've got two people running away. The lion eats the slow one.
Yeah, fair enough. Now, DeepSeek, you mentioned, and the market seemed surprised by it. Sort of came from nowhere, but as you suggest, that maybe people did see it was coming. Is there anything else like that around that we might come out of the woodwork? Are there companies that we just haven't heard of yet that are actually going to make a huge strides in this area?
Definitely. Definitely. That's as that chart shows. you know, this is these sort of costs are going to come down more and more. Sorry, it's on slide 5. Yeah. So, we saw this all the way through from GPT-3, 3.5, 3.5 turbo, llama. You know, everything's going to get cheaper and they're using more architecture. And the better the architecture, the more intelligent the humans are going to be. So, I mean, they use three different, to be fair, they reduce the cost for there were two things that they did. They basically trained on a bigger model. So, that's a one-off. You can't push the frontier by training off another model that is the frontier. Yeah. So that made it cheaper. But to be fair, they also use a few tweaks to the architecture of the coding, right? Well, that's happening all the time. So yeah. And let me make this very clear. This is not going to be the last model that comes out of China that is going to be revolutionary and people go, whoa, okay, those are nice tweaks. I mean, they weren't revolutionary. What they were doing, in fact, two of the things they did, Google had put in an academic paper about 4 years before. But Google are so damn sleepy that they don't do it. They're like an academic house. But these guys, to be fair to them, anyone could have done it, but they did it. They took the effort and they bothered to do it and it worked. Yeah. So this is going to happen all the time, but it's particularly, I would tell you, do not be surprised when the next time it happens, it also comes from China for exactly the reason I put on this slide. We are now in an AI war. We're in an AI war, we're in a Cold War, and we're in a trade war. So, hopefully it doesn't turn into a hot war. But so this will happen again without question. But I wouldn't worry about that. That's you know if you look at this chart on slide 5, yeah, can you imagine what the same chart for semiconductor CPUs are? I mean, that's been going on since the 70s, right? And then, if I gave you the history just briefly of semiconductors, America was doing it with sort of Intel, yeah. Then suddenly Japan would come out with a way of doing it cheaper. Then, of course, Taiwan came and did it a lot cheaper and different structure, and then ASML were doing more different ways of etching, and all these different things happen. So yeah, I mean, it's going to come from everywhere, and the same thing's going to happen. That chart is almost following. In fact, we've looked at this, and actually people have written on this chart. The price is coming down faster, actually, so far than semiconductors, which is actually brilliant because I don't know whether you know, but in the average room now in somewhere like London, in your room there, you'll probably have 15 semiconductors in that room. You probably don't even know where they are. There might be one in that radiator behind, in the thing that turns the dial to turn it up and down. There's loads in the cameras and everywhere. They're everywhere. And that's the point of Jevons. So yeah, well, let's hope so.
On that point, sort of, well, related to that, can Nvidia maintain its lead, or might we see maybe from China somebody come out and start eating stuff?
Well, there's several answers to this. Let's deal with, can Nvidia keep its lead? How long has Apple been leading in mobile phones? How long has TSMC been leading in the manufacture of semiconductors? How long has Microsoft been the enterprise? I mean, we're talking like 60s, 70s on some of these answers, yeah? So, everyone's got this perception that, you actually have these sort of technology companies that come and then die in 5 years or something. They don't. It's not actually the history of technology companies. Now, some drop away, some come on, other things change. But once you've got mm, a position of strength and you have business, basically, what I'm saying is, if you read the books about Nvidia, and I have tweeted some of them, yeah, and they're on, you can get them off on slide 9. You've got, subscribe to our newsletter. You've got follow our tweets. Visit, if you look through our tweets, I'm often quoting books, right? But Nvidia spend more on GPU R&D than the whole of the rest of the sector put together. Yeah. Now, in this instance, you do need human designers as well. You design chips and you design the software. Actually, Cadence, who do the software, announced that they were actually doing their next version of design software in collaboration with Nvidia. But you need the people as well. Now, any tech story, you read any tech story and why they're a success, it's because they build a platform of excellence, yeah, whereby the best scientists who do this particular strand of technology want desperately to work for that company, and that's where Nvidia is now. So yeah, sure, they can break it down. And by the way, this is a key point that I've just said. They are spending far more money than anyone else on R&D. But who, James, could spend more money than Nvidia? The Chinese government could spend, and they will spend more money. So, as I keep saying, we're in an arms race here, yeah? But in the end of the day, I don't think they're going to catch up. There's a lot of stuff about Huawei and whatever, and their Ascend chips and all this sort of business, but they're not productive on power basis and total cost of ownership. They're 3 years, 2 years behind. Will they catch up? Yeah, they'll get chosen. They will chuck everything at it. This is a war. They're going to do the best. Yeah. So expect news that they are chipping away. But if you look at the holistic thing, it's all very well, having it's like Ferrari put out a car and say, oh, it goes 0 to 100 in 5 seconds or whatever. But let's say, and then some Chinese car comes out and goes, oh, we could do it in 3 seconds. Well, it doesn't mean you go and buy the Chinese car. It's still a Ferrari, and there's cost of ownership, and there's a brand, and there's a software underlying CUDA. It's so hard to actually program these chips, yeah. And everyone knows the language CUDA, yeah. They don't know the language of the Ascend chip. So there's a lot of barriers for them to break down. And there's one last point I'd like to make. Yeah. What I love when I go to TMT, I love going to the TSMC presentation. So this question comes up every time to TSMC. And they say, yeah, of course, any guy in his garage can come out with a brilliant design for a chip, right? Well, what's he going to do with it? He's going to have to come to us to make it. Yeah. Now, I've been doing business with Jensen Huang for 20 years. He never lets me down. Right. So this guy comes to me, he says, make my chips. Yeah. No. Anyway, he's already booked out his chip production threshold now for 2 years. So even if a guy designs it now, right, it's going to be 3 years before he's going to get it into the manufacturing. And how much, if you were running TSMC, how much do you think you're going to give them with your capacity? Probably not that much. Maybe 1%, even if you're blown away. Maybe 2%. I don't know. So yeah, and then they deliver. It's 1%. They sell it. They come back with another order. You maybe give them 3%, whatever. But how long is it going to take? Ah, I don't think so. There's a lot of barriers in this industry. This isn't like Tesco v Sainsbury's.
Great. Thank you. Now, there's the portfolio. I mean, we always get these questions about why the portfolio is so concentrated as it is.
Yeah. We don't have to do it again then, do we?
But I mean, I'm always interested in what sort of pops in and out. There's some
Yeah.
new positions there that probably weren't there last year. What's have you been putting in that you think
Yeah.
is interesting?
Yeah, you're right. I mean, just to answer, I just am going to answer that question because I thought it was quite interesting. I put it in a newsletter the other day, and now listen, I want to make this very clear. Yeah, as you know, I used to own a wealth management company called Midas Investment Management, and one of our top picks, in fact, our two top picks for private clients. I sold it 5 years ago, but I found one of our top pick sheet 15 years ago, and the two top picks were Scottish Mortgage and Polar Capital Technology. So I love Polar Capital Technology, but I'll just give you an illustrative point. So We got Polar Capital Technologies. By the way, do you use, I'm sure you do, James, but I'm sure, just for your listeners, ChatGPT's deep research function, not the normal function, deep research is brilliant. Yeah, you need to try this. You click the deep research button and you give it a problem and it asks you some questions, some feedback, and it'll write a report for you. So we gave it Polar Capital's portfolio, yeah? And we said, how correlated is this portfolio to Nvidia? And can you pick out all the stocks that have a very high correlation to Nvidia, both in the business of what they do, so intuitively, and a mathematical statistical correlation? And then can you list those companies that they've got, give the correlation, and explain why intuitively it should be correlated? Yeah. Do you know what the subtotal of those stocks was? I can tell you, it was 37%, and we've only got Nvidia at 35. So, go figure. Believe me, my father used to work on the stock market, and he used to say, when it goes bad and things go down, they all go down. They all go down. So, you know, I get that everyone likes diversification and it makes you sleep well. And quite frankly, I want to sleep well too. And I'd love my shareholders to sleep well too. But you're really deluding yourself. It's all going to go down. Unless, of course, something intrinsic to the company happens. And I do understand that that is a massive risk. To answer your question, and it comes out of the reason I've said, I am constantly badgered about, diversification. So we're constantly trying a few new things. We buy different stocks. We try to get to know them better. I'm a great believer you don't actually know a stock fully until you own it, because you sort of live and breathe its daily movements, and you sort of get to know how it operates. But I think one of the things that we have moved towards, and I should just shut up now because I'm probably going to confuse the message, but we have moved towards what I would call some sort of more consumer names. Remember, we are a global growth fund, so we're not constrained by what we can do. And we just sort of seen some nice consumer names that we think are actually very interesting moving forward. So Formula One, F1, Liberty, it's called Liberty Media Corp, Liberty Formula One. You can see that it's got a 4 by it and it's 3.36. That's been built up over the last year. Robin Hood, which is a trading app. I must say, I do have some experience of private wealth management in the UK, as I just explained, owning Midas. And I don't want to name any names, but it's woeful in the UK. I mean, do you know, if you want to transfer in some money to Hargreave Lansdown, you have to fill in a paper form. And I posted it to them 3 times and they lose it. I mean, right. So, I've just sort of given up with that sort of business model. So I think Robinhood is doing something very exciting. It's offering different bets on all sorts of function. In America, you can get bets on who wins elections on it. You can trade crypto, you can trade gold, you can do 24-hour trading, which I've been practicing. So market shut, you wake up at 3 in the morning, you think, oh, I want to buy some Nvidia or whatever. You can in the States. I mean, it's just got so much different fun. It's almost, the FCA, I'm not saying it's a good thing, but I'm just sort of saying it's almost like an entertainment venue. It really is. There's so much going on. If you're interested in the world, if you're interested in how things are happening in politics and everything, there's prices on everything. It's actually very exciting. And we bought a very small amount of Live Nation down there. The other thing that we are interested in, and that's why I was talking about warfare drones, is clearly we are moving into a period where I hope that is not war, but you would be naive to think that, particularly after the Ukraine situation, that this sort of thing can't happen. And one of the big things that is coming out is the platform companies, although the shares have done very well, are unlikely to be the future of defense. Okay, so building an F-16 or F-35 or a tank, multi-millions of dollars, and then a drone that costs $500 comes along and takes it out. Warfare is going to be different. I mean, there was that great Elon Musk video where he showed drones swarming in a thing, and they're all swarming, and then there's sort of, I don't know, an F-35 or whatever it was comes past and bang, taken out. Yeah. So, and you go and build an aircraft carrier. I mean, how many billions is that? Yeah. And then these swarm of drones just come down and blow it up. So warfare is changing, and I think the Americans understand that. And I think there are some names that are very interesting in that area as well. So we're getting a bit more interested in the consumer area and a bit more interested in the in that warfare area as well. Just to mention two areas. I would remind you that, before we changed the strategy at Manchester and London, when I used to run it with my father, it used to just buy basically consumer stocks. So this is not something new for Manchester and London. Manchester and London's been listed for 50 years. So, we have a history of consumer stocks as well.
Can you explain the short?
The short?
Just yeah.
Yeah. We tend to try to run a sort of net long position within sort of decent risk parameters. So, we've sort of said, and you should not hold us to this because it's not sort of prescribed, but you know, if we think the market's very overvalued, we might get down to, I don't know, 90, 80%, i.e. 100% is fully invested. And when we think the market is getting less fully valued, we might get up to 120%. Can I just point out on this very slide, yeah, you can see I highlighted 13.4 as our EV to EBITDA. I haven't seen it that low for years, years. In fact, when the last time I saw it that low was when Manchester and London used to do consumer staples and stuff, and even then it used to be about 16. So technology is very cheap at the moment. So I think we before this drop, we started overlaying some hedges, right? And which clearly we should have put on some more, but we didn't. But we took our sort of net long down to about, I think it was about 96. So we sort of have 4 cash. And we then at the bottom went to about 115. Now I think we're about 111 or something like that. But the point is, sometimes one of us goes, God, I really want to buy that stock. And we're like, well, we're 110 or something, and I don't really want to get longer. So what we'll then do is like buy 1%, hedge 1%. We don't want to, otherwise you can get a bit carried away, believe me, and think everything's cheap and you start buying everything. And the next thing is you're about 130 and then you're wrong and the market goes down and it's just a nightmare. So it's just better if you really believe in it, you're happy to take the hedge. So, if you're not, then you shouldn't be buying it. You know what I mean?
Brilliant. We could do this all day, but I think we better wrap up there. So that's been really interesting, as
Great. Well,
usual. Yeah.
thank you
Thank
very
you.
much. And, as I have put on that slide, which you very kindly showed, you know, if you are interested, the best way to watch us is subscribe for our newsletter. We send that about 10 times a year. And if you do like social media, we tweet quite regularly, which annoys a lot of people, I can assure you. So it's not boring tweets.
Great. Thank you very much indeed, Mark.
Okay, thanks, James.
Go leave the disclaimer up for a second so you can see that. We'll be back next week and we're talking to Alex Wright, who's the manager of Fidelity Special Values. But thank you very much for tuning in today and have a good weekend and we'll see you next Friday. Thank you.